There's no such thing as discipline or controlling your emotion or any of those nonsense terms that anybody tells you, because that's literally physically and psychologically not possible in human beings. What is possible is to study yourself sort of on a kind of outside basis and understand, well, I've seen this every day. This happens and I do this. Every day this particular setup happens and I get suckered into taking it because I think that that's the right setup, but it's really not part of my stuff. So once you actually start to note, take, and classify your own behavior, your own patterns, the patterns of your personality, in many ways, I actually think are more powerful than the patterns in the markets.
Welcome back everyone. Today I'm sitting down with Boris Schlossberg from BKFX. We talked a few times in the past. We discussed a few things. Boris is a really good trader. I know from a couple of interviews before. We had him a few times before. Also, he's hosting the Trading Battle from time to time. So good to have you here, Boris. How's it going today? Welcome on the podcast.
Oh, it's great. It's great to have you be back on your show. You're one of the few people that can pronounce my name properly. I think it's because of your French-Canadian background. It's great. We've had a really, really great time in the markets while everybody's been suffering. And I think it's kind of like speaks to the idea that in this day and age when the buy and hold idea is going to be very challenging for not weeks, months, years, probably. And it doesn't matter what the economy does. I think it's just the markets themselves find themselves in a completely different environment. So, just buying the dip and hoping that it's going to perform is not going to work. What is going to work is to improve your trading skills. And that's what we've been doing over and over again. I think that's really paid off because while everybody else is suffering, we're just having a very, very good last couple of quarters as our trading skills have really improved.
What does it mean when someone says improve your trading skills? Because that's like a pretty broad topic. You could talk about mindset. You could talk about so many things here. What do you think about when you think about improving your trading skills?
It's a great question. And it's actually a much more simpler answer than you think. There are three things I did that radically changed my trading for the better. Number one, I focused on one single instrument. All I trade is the US 30 these days. I'll trade a little bit of NASDAQ too, but I mean, even within that subset, I'm only trading one single product, right? But generally, I want to trade one single instrument. So that was number one thing that has improved my trading. Because then you get to know, the reason why you want to trade one single instrument is as individual traders, we have a huge amount of advantages, but we also have a huge amount of disadvantages. The one disadvantage we greatly have is that we don't have any information edge. We don't really know who's buying, who's selling. We certainly can't front run the news. Reacting to the news is almost always a sucker bet. But what we do have as our advantage is our ability to trade small. In other words, whatever we do isn't going to impact market price, so we can get in and out of things very quickly. And the value of focusing on one single instrument on an intraday basis, this is a critical thing. I'm talking about an intraday basis trading because that's what I do, is the patterns on an intraday repeat themselves over and over and over every day. There literally is only two trades to make. I'll get into that in just a second, but there's just two trades to make intraday. As soon as you figure out that those pattern repetitions, it becomes so much easier to read the market. You don't need volume trader. You don't need fancy indicators. You need anything. There's just really only two things you need to understand. And the only way to do that is by watching the market very carefully. So that's been one thing, just focus on one instrument. And then the second thing that's just totally improved my trading is I stopped all averaging in. I stopped all martingaling. And I went to a 1-to-1 risk reward ratio. I basically went to, 1-to-1 and all I'm trying to do is be 51% better every day. I generally, succeed at being 60%. But if you're anywhere on the positive edge of that spread, it's really, really, really helpful. And then the third thing is, obviously, I'm a huge believer, we talked about this in using algorithmic tools for a whole bunch of reasons. But the single most important reason why I use my algo to trade is because it helps me execute and manage the stops and targets automatically. What I find is that as long as you have trust and faith in your setup. Let's say, you trade it, doesn't work because of course it's never going to work always. And you trade it again and you trade it again properly. And the properly will never occur if you do it manually. If you do it manually, you're always going to the worse, the worse you do as a trader, 2-3 losses in a row, you're always going to want to fidget and screw up the process. The algo will only take the trade as you wrote it, on the rules that you wrote it. That's a huge advantage. So I just basically those three things. One product, zero leverage, zero martingale, even money trades, and let the algo do the work. It's been a huge improvement in my results just from the steadiness of my equity curve. Yeah, I don't want to jinx myself, which I probably will, but those have been the three things that really help.
Interesting. I know a lot of people who be against you or disagree with those take profits, those 1-to-1. People say you gotta have a positive reward to risk. You gotta aim for more than you risk in the trade.
I believe that everybody who tells me you have to have a positive risk reward has. Let me first make the unkind comment. Everybody who tells me to trade with a 2-to-1 or 3-to-1 risk reward ratio is really not trading. Those are not traders. Those are YouTube gurus. Because in reality, nobody gives you $2 bills for 50-cent bets. Okay, I mean they do, but that happens 1 out of 100 times. It's not about risk reward ratio. It's about your win bet ratio. In a real market, with incredibly efficient prices, incredibly efficient flows, it's extraordinarily difficult to achieve anything that is 2-to-1 risk reward more than 25% of the time, right? Run those numbers. Those are not positive numbers. Most of the professional traders that I talk to, their extreme take profit is 1.5. In other words, they're comfortable, maybe being 35-40% at 1.5. You have to ask yourself the reason why I think all of those the most fake advice you get on the internet is these risk reward ratios and the win ratios. I have a 2-to-1 risk reward ratio and I win 70% of my trades. Just think for a second what the liar is saying to you. They're basically saying to you that within a couple of months they can take a $10,000 account and run it to about $1 million. And then within a couple of months of that, they can run it to 100 million. And within a couple of months of that, they can run it to 1 billion. Nobody in the history of trading has ever achieved 70% win rate on a 2-to-1 risk reward ratio in any kind of a high frequency. Maybe if you did 2 trades a year, yeah, okay, that's great. That's not the same. If you did more than 100 trades a year, I guarantee you've never done that, because the math of that is simply impossible. In any normal corporation, your profit after you sell toothpaste, you Procter and Gamble's profit is 5 cents, right? So a 5% edge, where let's say you have a 50-50 bet and you're winning at 55%, is extraordinarily lucrative and extraordinarily attractive, and far pretty much at the edge of reality of what you can achieve. I mean, high frequency trading firms have like a 51, 51.2, 51.3 edge, right? And those guys are far smarter and better and have more statistics than you. So, I always take issue with anybody who tells me that, because that's a lie. I show my account to all of my traders every single day. It's public. It's on MyFX. So MyFX, sorry. And you can see every single trade. As a matter of fact, I open up my MT5 publicly, so you can see every single trade I'm taking. And it's not pretty. It's just that, you don't get those kind of risk reward ratios. So that's, to me, always the key differentiator between I know somebody who trades for a living or somebody who is just, sells trading courses for a living. Those are two different things.
That's a good sign for expectations, because people expect these kind of numbers you talk about. They expect that if they trade something at like a 40% win rate or a 51% win rate, that is not good enough. Now they have to find something better, even if the take profits may be good enough. In that case,
right? And ask themselves: are you better than Exxon? Are you better than? Are you even better than Microsoft or Google? I mean, Google, Microsoft, the fattest, highest, most lucrative. Amazon has like a 5% edge on all of the packages they sell to you. It's just not reality. And you're talking about markets much tougher than all those guys. All those guys dominate their markets. They're the axe, as we used to say in the old days, of those markets. you're just, you're competing in the single most competitive market in the world. So you should be grateful for a 5% edge. And you're right. I think that's another thing that's terrible because people have these horrible expectations of like, hey, if I just do this what people tell me to do, and I should be earning, I should take $10,000 into $100,000 in 2 months. Yeah, I mean, anybody who does that is just basically gambling with a 10,000 that they're trading, and that's why it's non-replicable. Yeah, how many guys who you've seen win trading contests then go on to trade for the rest of their life? The answer to that is almost always zero, because they die. They all die in the battlefield. And what I try and do is survive for a lifetime, and that's where those numbers, that's where those skills and those expectations really come in. If you want to survive for a lifetime, you have to have a much more realistic idea of how trading actually is really done.
So I know we covered a lot here in just a few minutes of the podcast, and that's awesome. You mentioned these two setups to trade in the market on a daily basis. Can you explain more what these two setups are and kind of what you're looking for?
Yes, great question. So again, nothing really complicated. There's only two price actions that happen, and you need to have setups that can accurately filter for when those things have a higher probability of happening. The two price actions is continuity and reversal. As a matter of fact, there is literally no other strategy in trading, and everything from the most complicated Elliott wave structures to the most algorithmically driven high frequency trades to your basic macro, hey, let me look at the world ideas, are all a function can be reduced to just two types of trades. It's either a reversal trade or a continuation trade, right? Now, what we do and where my setup has been very helpful, and I have to really thank Linda Raschke, the market wizard, for this, because I've had her on my Trading Fest several times. And like the last time we had her on Trading Fest, she sort of, I just let her talk for like 2 hours. And she basically just gave like a PhD level seminar in intraday trading. She's been an intraday trader for like, 40, 50 years. And the most interesting thing she sort of pointed out to me was the fact that intraday trading is basically auction theory. It's just like going to Christie's or Sotheby's, in terms of, betting for art. It's always auction theory, and always the highs and the lows of the day are the most important levels to watch, right? And that's, we developed basically our reversal and continuation strategies relative to the highs and lows of the day, And, I was just thinking about this, not to wax philosophical here, but I thought it was interesting. Like, I was like, why do highs and lows of any instrument, but of course, stock index futures, which is what I specialize in, matter so much? And that's because as human beings, we're always a relative bet species. Like, we're always comparing relative to whatever is the current standard, not the absolute standard, right? I mean, I'm just thinking, like, what's the definition of happiness? It's an absolute standard. Like, if you're healthy, you have enough food, you have shelter over your head, that's absolute standard of happiness. But nobody's happy with that. Nobody's happy with that, because what you want to be is you want to be running a marathon, you want to have the biggest house in the world, and I don't know what the third value, and you want to have more, more toys. None of those things are necessary for an absolute standard of happiness, but we all want a relative standard of happiness. And I think as a human species, because we're always measuring ourselves against some moving target, that behavior completely translates itself into the marketplace, where the highs and the lows become the relative barriers against which the price constantly battles all day long. And that's where we spot our opportunities and try to trade those trades. That's basically it.
That makes sense. That makes total sense. So you'd be looking at the lows and the highs from the day before to trade that specific day, or how would you look at this?
No. We look at we have a special indicator that I have made for me, that we use on TradingView, that constantly shows us the fresh highs or the fresh lows made for that day. So we have that mark is sort of relative. It's always dynamic. It's moving, and when we get close to those levels, we have a series of reversal setups and a series of continuation setups that we apply algorithmically. So in other words, light price is near the low of the day. What are we going to do? Well, we have a reversal setup that's going to follow the following particular rules. We arm our algorithm once it gets into that area, and then let the algo execute once all the rules are met. And that's, it's as simple as that. And do that over and over and over again. Generally, I try to, we're this is a topic that I've noticed been covering in your podcast, and I've started to cover this in the trading battle. A lot of people are trying to pass their prop accounts, and so one of the things that I've started to work on is how do I use our strategy to make it very, very prop compatible. Like our strategy actually is extraordinarily well suited to prop trading because it takes very small, very defined limited risks and has very small defined limited drawdowns. And then what I did is I simply, so just to give you an idea, you have $100,000 account. The typical prop challenge is 10% up with a -5% drawdown. That's sort of almost all the prop firms have that formula, right? So now I've kind of refined my setup in terms of sizing, where we're going to take probably about 10 trades a day. Remember, not all of them are going to be winning. So some of them, we try to shoot for, aim for on a $100,000 account, $200 a day steadily. That gives you 1% a week. And in 10 weeks, we achieve the target. Now, again, that may not sound exciting to people who want to pass it in a day, which is fine. Go ahead, pass it in a day. But the flip side of that is I have virtually no drawdown. The drawdown is 5%. My drawdown in the last week and a half has been half a percent. I think max. I'm talking about max drawdown, and even that's going to get lower because of the sizing. So there's two ways to achieve leverage in all financial markets. One is the classic way we know. You take 10,000. You borrow 100 times against that. You have, 10 million. Is that what it is? Yeah, 110,000, or is it a million? No, 10,000 times 1,000, whatever it is. That's the classic 1 to 100 leverage, right? And that's how people do it. You take $1, you borrow 1,000 times against it. You have $1,000. That's what you're trading, which is fine. But obviously, the problem is even the smallest move against you wipes you out completely. Right? Like 1% move on 100 to 1 leverage. So Dow Jones goes 1% against you. You have a $10,000 account on 100 to 1 leverage. You're wiped out. Your 10,000 is gone in a day. Right? So that's one way to achieve leverage. Another way to achieve leverage, which is the way we try to do it, is by constant turnover, by flipping over, by doing 10, 15 trades on the same $10,000. And so $10,000 flipped over 10 times is the same thing as 10 to 1 leverage. The good example of that in the real world is Zara, the fast fashion retailer. The reason why they transformed the whole fashion industry was because he flipped the whole store inventory in like 5 weeks. Everything that, he sold everything out in 5 weeks. He bought more. So he didn't need huge amounts of money to purchase inventory and hold it in the store. He would take small amounts of money, buy a small amount of inventory, sell it, take the same amount of money, buy more inventory, sell it. It's the exact same concept that Zara used in fashion. We like to use in trading. And of course, the great benefit of that is your drawdowns are extraordinarily small because you're trading on very small leverage.
At the same time, people have to understand that the way you pass a profit challenge is the same way you will trade after the challenge with it. Like you have to go back to a more normal style of trading, because that style of trading is probably not sustainable long term anyway.
Correct. That's why you really, and that's one of the greatest discoveries people make. Even if they pass the challenge, they tend to lose the capital right away because of the way that you're trading on the demo account to pass the challenge is really much more a function of luck than skill, right? If you're trading if you pass a challenge in a day or 2 days or a week, it's all luck. There's nobody makes 10% in a week without taking huge risk and just being lucky on their position. And therefore, that luck doesn't hold. So when you're trading in real life with real money, you usually lose it in the first. They take your money away from you in the first week because you failed your luck test. So what we're trying to do is teach skill, which is obviously much more durable and robust. And that's where small leverage, turnover of capital really makes much more sense. Yeah.
Do you see something better with taking more trades? Like the way you do is probably more day trading, but do you feel like that's a better edge day trading than someone who's going to swing trade in the challenge, taking fewer trades?
Yeah, I do. Now, having said this, I have to qualify this. I think anything I say is only applicable to me and people who have a personality similar to me, right? So, under no circumstances do I think that what I do, you should do if you don't feel comfortable with it. Because there's 100 different ways to trade in the markets, and there are people who trade very differently than I do and very well. And you need to just, the single most, we talk about this all the time, that the single most important thing is that you need to align your strategy with your personality. Now, in my group, we actually created a banner and a logo. We call ourselves Degenerate Traders. And it's kind of a, tongue-in-cheek comment about what we do, meaning, the logo is Degenerate Traders, any market, any time, because we like price action. I'm a person who doesn't have a lot of patience and likes quick in and out stimulation and ample. So the other positive side of that, of course, is I have lots and lots and lots of sample size. I can within a week do 100 trades and have a good idea of where things are working, things are not working, and how to tweak them. So I get a tremendous amount of fast feedback. I'm a person that likes fast feedback. There are people who despise the way I trade and like to just simply trade, once a week or once a month. The good thing is my strategy is very scalable. It is fractal in a sense that the same reversal continuation ideas repeat themselves on much larger time frames. It's just that, I would die of boredom watching the 4-hour chart. And I mean, I went back to FX for a little bit. Kathy always drives me back to FX occasionally. And even like on a 1-minute chart, I'll lay down a trade on euro, just to give you an idea, within stock index futures, our average duration of the trade is around 10 minutes, right? I'm in, and 10 minutes is like a long time. I'm in, and usually sometimes it results in 2 or 3 minutes. And I'm trying to do this, 5, 10 times a day, find optimal points during the day. And I'm just in and out 5, 10 minutes. So then, we started applying this to currencies, which actually works. But like on euro, the same duration is like 2 hours. And I'm like, oh, I'm dying of boredom just watching this thing, because it's like a slow motion car wreck in FX. So you have to know what you like, what kind of velocity you're happy with. And by no means, what I do is should you do if that's not the kind of, if you like to go fly fishing, then my strategy is not for you. If you like to go fast on a motorcycle, then it probably is. That's kind of how I subdivide all of my traders.
As someone who's more impatient, who likes to do a lot and who likes to be in the market, how did you make yourself stick to just one thing to trade, like one instrument?
Well, feedback is a wonderful thing, right? I did a Trader Fest a little while back, a couple of weeks ago, and I had Denise Schull, who is probably the single greatest trainer of traders in the world. I mean, she teaches all the hedge fund managers. If you've ever seen the show Billions, the character of Wendy, who is like the main character in that show, the hedge fund psychiatrist, that's her. That was based on her character. So it was extraordinarily valuable to, and she used to be a former trader herself. So she isn't just a psychiatrist who teaches you how to trade. She's a trader who went back to her original, training. And so she had a tremendous amount of impact on me. And one of the things that she said to me is that I think this is great advice for anybody. There are 2 things you need to do to make your trading strategy successful. You need to trade your strategy, and then you need to trade yourself. Meaning you need to, when you're taking a journal of how your strategy is doing, you also need to take a journal of how you are doing with that strategy. Because that's the thing that people always forget. There are 2 variables in the game. There is, your analysis of the market, and then your execution of your analysis. And your execution of your analysis is always 100% going to be emotionally based. 100%. I mean, one of the first things is that emotion is a feature, not a bug of human condition, which is very true. And once you embrace that, once you understand that there is no such thing as discipline or controlling your emotion or any of those nonsense terms that anybody tells you, because that's literally physically and psychologically not possible in human beings. What is possible is to study yourself sort of on a kind of outside basis and understand, well, I've seen this, every day this happens and I do this, every day this particular setup happens and I get suckered into taking it because I think that that's the right setup, but it's really not part of my stuff. So once you actually start to take and classify your own behavior, your own patterns, the patterns of your personality. In many ways, I actually think I'm more powerful than the patterns in the markets. The patterns in the markets are actually, relatively easy to interpret, but to understand your own patterns and then modify them, because you trade yourself the way you would trade a chart. You say, oh, well, that's a dumb setup because of course it's not going to work. But this setup, if you do it, that's going to work. Speaking about, FOMO, for example, FOMO was a huge failure of mine. And that in many ways, what that entailed is that my algo has all sorts of like drop down menus for each particular strategy, but it also has a drop down menu for market, right? And anytime I used market as an entry strategy into the marketplace, that was generally a sign of my poor behavior pattern because I was chasing something. I was not letting the algo take the trade. So that's what helped. I mean, I already forgot. I started ranting over what my question was, but I think the most important thing is I learned how to trade myself in conjunction with trading my own strategy. That's really improved my overall performance. It went from me making 30 unnecessary trades a day to making just 7 to 10 qualified ones.
I know a lot of traders who are sort of like jumping markets. Like they hear about, let's just start with Forex, and they hear about cryptos, and jump to cryptos, and hear about stocks, jump to stocks, then jump back to futures or something else, because they hear something better than other stuff. They hear people convincing them that this market will be better than the other ones. How would you tell them to avoid doing that?
Honestly, I wouldn't. I think, it's all part of your trading journey. And that's part of the thing what I mean about not suppressing. You're going to lose all that money. You're going to jump from FX. You're going to go to crypto. You're going to trade stocks. You're going to do this. It's all part of your journey. It's not a bad thing. You need to learn what you like. You need to figure out which market appeals to you. Maybe some market, you really lost a lot of money in it, but you really found it interesting. You need to explore, as long as you sort of understand, look, there's zero chance I'm going to succeed in this time or this time or this time. But what there is there's all this valuable experience that I'm gathering. I like the way crypto trades, or I'm really, really comfortable the way Forex trades because, it's much more responsive to longer term charts. I understand the long-term macro implications. I understand, maybe I want to do carry trading. And certainly that's one of the least intensive strategies because it's essentially an interest rate strategy. So as long as you have a long-term suppositional view on interest rates, you're going to have a very good time in carry trading. There's a million different things you do. It all depends on your personality. So go out there, explore. I'm not a believer saying, oh, you only got to do one thing and one thing only from the beginning, and that's going to give you success. It's almost actually going to lead you to total failure. You cannot focus on one thing until you've kind of wasted your time on many things. I think that's sort of, it's part of the human condition. You got to just really waste a lot of time and money exploring, but that's the joy of it. If you still find it joyful, if you still find it interesting, that's when you can really recalibrate your focus to the one thing that you think is going to do well.
And as someone who is not the opposite of that, where you have your algo running, you have strategies like down, you have the market you trade down, how do you keep developing yourself? How do you keep learning, keep practicing, keep researching new things?
That's, it's a really great question. Because the markets are always changing. And of course, the single constant that's changing, in the markets, ironically enough, is volatility, right? We always talk about the fact that volatility is mean reverting, right? But in that reversion of the mean, in that roller coaster ride of volatility is where you either win or lose. Yes, eventually everything comes back to its normal value. Eventually Tesla is going to trade at $20 a share because that's what it's really worth. I don't want to get any Tesla fanboys on me, but from there to here, you're going to bankrupt yourself 10 times over unless you understand volatility. And I think that's one thing you constantly have to change. Markets, the tone of the markets changes all the time, so you have to always watch them. And also, the other thing is right now, let's think about this. Right now, equity markets have a lot of intraday volatility. Where the bear markets are actually excellent for intraday volatility. But God help me if we go back to I'm trying to remember, was it 215, 216? There was a period of time in the equity market where we did not have a 1% day. In other words, right now we move 1% in an hour, right? We move 1% an hour. If you move 1% an hour, that's like heavenly manna for anybody who day trades. But in 15 or 16 or 14, I forget what it was, some very low volatility environment, we didn't move 1% for 250 days. In other words, the equity markets moved within 1% range. That you might as well just put a gun to your head and blow your brains out, because not only you're not going to make any money, but it's impossible to watch the price action. So one of the ways to improve yourself is to like, you have to constantly be on a lookout on, what other market, where other, you have a certain methodology, you need to be able to apply it to an instrument that's responding to that methodology. And sometimes, sometimes you just have to, there isn't any, and then you just have to not trade. But yeah, I mean, just because you have strategies doesn't mean they're always going to work on that one particular product. Like the classic example, the really, really classic example of how things change is that people always used to tell me is orange juice, right? So orange juice was a product, and it's an obscure little product, but if you've seen trading places, everybody of course remembers orange juice futures, right? It's an obscure product, but like it used to always be a buy in the winter and a sell in the winter and a buy in the summer. And the reason why it was a sell in the winter was because all the producers in Florida were producing it in the winter, and then there was no production in the summertime, so the prices of oranges would really, skyrocket, right? So that was like the constant pattern of the orange juice market. You'd be a sell in the winter, buy in the summer. Then Brazil became a huge orange juice producer. Now, and Brazil, of course, on the opposite side of the world, so their summers are winter. So they started flooding the market with oranges in the summer, and oranges became a sell in the summer, buy in the winter. Now, that is, you've been trading that market for 40 years on that seasonal pattern, and you would have been fine. And then the rug would have been pulled underneath you. And that's what I mean about the change in the markets. Markets are always changing in some kind of a variable that you haven't maybe even thought about. So you always have to be aware and adjusted to that fact that change is the only constant we have around you.
At the same time, could a market like the US 30, who's an index, really change that much? Because it's still about companies, and it didn't really, like, people could argue it's the same patterns for like many, many years now.
Yes, it's been, but what I'm saying is, we could be right now we're in a high volatility environment because that's sort of like the first phase of the bear markets, right? But then the other phase, like read about the stock market of 1930s. The brokers on the New York Stock Exchange floor used to bring chess, and they would play chess with each other because there'd be no price. Nobody would trade with each other. Now, we're not going to be there, but the point is, it's all relative, and you always have to be prepared. You have to be mentally prepared for the idea that, just because you're making money today in this beautiful environment, everybody's speculating. Look at, crypto is a great example. Can you make money scalping Bitcoin or even ETH today? I mean, the volatility went from 10% a day to 1% a day, right? I don't even know anybody who trades crypto anymore, right? Because the whole market died, and that's essentially the whole idea. Is you have to understand that markets are only good. They're not good forever. They're good within a certain environment. You want to take advantage of that, but you always need to be aware of the fact that the party is going to end. The party always ends.
So where can people find you if they want to connect with you, reach out after the podcast? Where can they search for what you do and connect with you?
So the cool thing is, we finally moved into the 21st century. I always joke around with Kathy that our whole job in life is to teach boomers Discord. So we opened up our first Discord just very recently, literally like a couple of weeks ago, and it's been a smashing success. And I love the community aspect of it. And there's a big part of our Discord that's completely free, and we already had like within a week, we just opened up last week to free, and we had 2,000 people join us. So you can always find us on our Discord. I constantly post a link on my Twitter. It's at FX Flow, and also I would be remiss for you guys not to follow my partner has a much bigger following than I do, and she generally has much more intelligent things to say than I do. So you should really follow her, Kathy Lean FX. And she always posts the links to our Discord. So that's one great way to find us. You can also obviously go to bkforex.com. We're revamping our website there. I'm going to put a lot more stuff on there as well. So that's going to be very valuable. But really the best way is to just jump into the Discord. You can always message us. You can always say hello, ask questions. We have forums. We give away free courses in there. There's just a lot of fun stuff in that environment. I created my own degenerate trader tokens. You get a token if you do good things. We call them a degen. So we're having a good time with that world, and that's been our big project. And I think we're going to continue doing that because it seems to be that people really enjoying it. I live trade literally. My account on the screen, I say we're gonna trade this setup. We're gonna do this. I'm setting this up. I'm arming the algo. You can see everything forward. Not in the back of the chart, but forward of the chart. And then I also, as I said, I expose my whole account completely to anybody who's a member of ours to see how I'm trading, because I'm a huge believer that you can only teach by doing. In other words, or you can only learn by doing, whatever is the right methodology. I'm the same way. Like, if somebody gives me a 200-page textbook of how things are done, my eyes glaze over. But give me a 30-second YouTube video on how to change a tire, or how to, fix my coffee pot, or whatever the hell it is, and it instantaneously becomes clear to me. And I'm the same. I believe it's the same thing in trading. I can talk to you about momentum and methodologies and all sorts of indicator channels and lots of complex stuff, and your eyes will glaze over. But when I show you, here's what's happening, here's what price is doing, here's what our indicator is doing, here's the relative changes, here's why I'm going to be going long, here's why I'm going to be going short, here's what me actually doing it, here's me resolving the trade positively or negatively. All of that creates, I think, a much more intelligent way of learning the process. And most of the guys in my room trade much better than me, because then they take my ideas and make them their own, which is really how you want to do it. You really want to take it and make it your own, and trade the way you like. I'll give you one example. A lot of people in my room love to trail stops. Like, a lot of people in my room, will milk the trade. They like to take part of the trade off, and then just maybe I go for 40 points in the US 30. They sometimes can make 200 points in that move, because they really, really milk it. Now, I hate trailing stops, and I never trade that way. But we've created the functionality in my algo to do it, and lots of people are doing it, and they're really, doing great. It's just, so the whole point is to always make what somebody's showing you your own. But I really, really huge believer in learning by showing. It doesn't help me to tell you, oh, here's my strategy, here's how great I did with it. I need to show you how it's working on a day-to-day. I need to show you how to drive the car. Once I show you how to drive the car, you can drive it yourself, basically. That's my philosophy of life, basically.
Totally makes sense. I'll put a link below that we discussed, so Discord will put a link below the description of the video here on YouTube, the show notes. Boris, I appreciate your time. I know this is good advice. We went straight to it. We covered a lot here, so I appreciate that for sure. People are going to love this, I have no doubt. And definitely we can catch up in the future and see how you're doing, see how you improve with that, and people, I think, would love it. So
would love it. Every time I come on your show, it's better and better, Etienne. I really, really appreciate it. I listen to your podcast every single week. It's a must listen to anybody who's in trading business. And, I want to thank you for everything that you do for the whole trading community. Thank you again, man.
Thank you very much, Boris. I appreciate it. And we'll catch you pretty soon in the next episode at some point.